Hey guys, and welcome to Zonos Crypto. In this video we'll take a look at the latest news about the BTC bottom, Celsius, risk management in the bear market, and then also 3 more. Okay, then let's get right into the market watch. BTC is coming in at 21,534, Ethereum over 1600, BNB at almost 300, XRP at 34 cents, Cardano at 46 cents, Solana at 36 bucks and 25 cents, Polkadot at $7 and almost 50 cents, Avalanche at 23.15, and Polygon at 81 bucks, 81 cents. Okay, the largest movers in the last 24 hours are Lido with 13%, EOS with 12.6%, Quant with 12.5%, and Chili's with 6.3%. And largest losers are Celsius with 6.16%, Gnosis with 4.6%, Anchor with almost 3%, and OKB with 2.7%. Overall, we're 1% up from the last 24 hours. Okay, then let's get right into the first news. 3 reasons why the Bitcoin price bottom is not in. Bitcoin hash ribbons flash bottom signal. Hash ribbons are a metric that tracks a Bitcoin's hash rate to determine whether miners are in accumulation or capitulation mode. As of August 20th, the metric is showing that the miners' capitulation is over for the first time since August 21, which could result in a price momentum switching from negative to positive. Yeah, exactly. Then the BTC price rising wedge breaks down. Bitcoin's price decline this week has triggered a rising wedge breakdown, suggesting more losses for the crypto in the coming weeks, which you can see right here, the rising wedge and then the breakdown here, and now we could get down to about 17.5 again. Applying the technical principles on the BTC chart above represents 17,600 as the rising wedge breakdown target. In other words, the Bitcoin price could fall by approximately 25% by September. And the last one is the Bitcoin bulls are misjudging the Fed. Bitcoin had surged approximately 45% during its rising wedge formation, after bottoming out locally at around 17,500 in June. Interestingly, the period of Bitcoin's upside moves coincided with investors' growing expectations that inflation has peaked, and that the Federal Reserve would start cutting interest rates as soon as March 23. The question is, will they start cutting interest rates or will they get even higher? And yeah, let's see if the crypto market is, the Bitcoin bulls are misjudging the Fed or if they are not, and we could see some rise at the end of the year and also to the bottom in September. Let's see what exactly will play out. Okay. Bankrupt crypto lender Celsius now says it likely has enough cash to last through end of the year. Finally. The chief financial officer said during a bankruptcy hearing the company will receive additional funds via maturing loans and sales and use tax savings. Celsius had previously estimated that it would run out of cash by the end of October. According to court filings submitted on Monday by Kirkland and Ellis, the law firm Celsius hired to direct its restructuring plan. Ferraro said additional funds are coming from 61 million in loans made to crypto exchange Bitfinex that are maturing over the next few weeks, as well as roughly 20 million in savings on sales and use taxes on mining rigs that Celsius purchased. According to Ferraro, since its last filing on July 29th, Celsius had spent 40 million of its cash balance primarily on building out its mining site in Texas and on payroll. In July, Celsius mined 8.7 million worth of Bitcoin, but the company's operational and capital costs for the month exceeded those earnings. Still not profitable, huh? Okay. This to Celsius. Do you think Celsius will or can be built up again to some glory, or would you rather stay away from it? Leave a comment down below on what is your opinion. Before we get into the next news, please leave a like, subscribe, and also hit the notification bell if you think the video has been useful or informative so far. Okay, then into the next news. Risk management in a bear market, a multifaceted approach. Which risk management questions should institutions ask when they're selecting a partner, especially a partner from whom they're intending to earn yield or borrow against their digital asset holdings? The answers: institutions looking to get into crypto and gain understanding of yield and crypto lending must bifurcate the risk discussion to cover both centralized financing as well as decentralized financing. Is it the same set of risks for DeFi? In DeFi you have smart contract risk, so the question is whether your engineering team is reviewing code, doing code audits, or is using third parties to audit smart contracts used by the DeFi protocol. What are the main lessons that institutions as well as individuals should learn from the recent problems that have faced some other crypto lenders out there? Well, some of the problems were related to fraud, so they should ask about the regulatory status of the company. Certain regulators are better suited to preventing the kind of fraud that we've seen in the markets. That's ironic, very much so. There are two ways to look at crypto. The first is if you know what you're doing, either as an individual or an institution, you can leverage DeFi and key management to become your own bank. And then there is the vast majority of the investing public, both individuals and institutions, who are not in a position to leverage crypto to become their own bank, and therefore they have to rely on trusted third parties. Quite interesting approach, to be honest. What is your opinion on it? FTX increased revenue by 1000% in 2021, and 2022 looks even better. The world-famous cryptocurrency exchange platform FTX increased its revenue by more than 1000% during 2021, from 89 million to 1020 million, according to company financial documents leaked to news outlet CNBC. According to the documents, FTX's net revenues during 2021 grew exponentially to more than 387 million, a significant increase compared to the 40 million it made in 2020. Quite heavy, to be honest. Nice increase. FTX is also one of the exchanges which will definitely survive the bear market, so get right, maybe DCA into the FTX token or in the FTT token. It definitely could be a great chance for some upside potential in the next 3 years. No financial advice though. It is worth mentioning that FTX was founded 3 years ago and in such a short time has become a significant competitor to Binance and Coinbase, two exchanges that hold a large share of the cryptocurrency user base. However, unlike FTX, they are not doing so well during the crypto winter, especially Coinbase, because of its layoffs and its 1 billion loss in the first quarter of the year. Yeah. Currently, FTX is also discussing the purchase of Bithumb, a Korean cryptocurrency exchange, and reached an agreement with BlockFi to buy it for 240 million. It also tried to buy Celsius but backed out shortly after. FTX is in absolutely heavy accumulation mode. They're just buying and accumulating companies for services, new customers and so on. So FTX is in a wonderful position right now. Web3 games incorporate features to drive female participation. Web3 games are focusing on community building, aesthetics, customization and representation to attract female users. But is this enough? Although there is still an apparent lack of women in the Web3 sector, blockchain-based games geared toward women may help drive inclusivity. A recent report from the Entertainment Software Association found that 48% of gamers in the United States identify as female. It has also been noted that nearly half of all gamers in the world are women. So what are these features? A number of Web3 games are coming to fruition with the goal of appealing to a predominantly female audience. For example, Fashion League is a free play-to-earn mobile game that allows users to develop their own fashion empire. We believe that everything will be gamified in the future, as our statistics have found that the gaming market will exceed 300 billion by 2027. Web3 games need to be inclusive. Exactly, this about women going more into Web3 games. Now to the last news of today. CBDC could combat market dominance from big tech, says the European Central Bank. The European Central Bank unveiled a discussion paper this week on the pros, cons and economics of implementing central bank digital currencies, CBDCs. It suggested that CBDCs could help stave off dominance from big tech firms in the payment market due to network externalities surrounding the use of a medium of exchange. The discussion paper begins by noting the growing interest in CBDCs, which are now being explored by central banks worldwide. They've so far been launched in 2 countries, the Bahamas and in Nigeria, which means a lot smaller companies, and they've been launched there because they want to see how a CBDC is working, what is functioning, what is okay, what is not okay, advantages, disadvantages, what are the problems, so that they can then use this knowledge to use it in world countries, USA, China. Yeah, China is also a special case. in the whole Europe, Germany, Spain, Italy, Austria, Poland, who cares? And yeah, this is their way of trying and getting into the topic CBDC by implementing it in smaller countries and seeing how it works. Yep. Regarding crypto, the ECB fears that dominant platforms issuing digital currencies, for example Diem, could use network externalities to become dominant issuers of private money. So what can a CBDC offer? As a remedy, the report proposes CBDCs as a tool that can ensure the continued practical use of public money in the economy. It could reduce the cost of payments, resolve frictions in financial intermediation, and improve the central bank's ability to serve as a lender of last resort. This to the CBDCs, or the progress of implementing CBDCs. These were the news of today. If you think the video was useful to you and you've learned something new today, then please leave a like, subscribe, and also hit the notification bell so that you will not miss anything in the future. While you're already here, you can watch another video. They're all quite interesting. Have a wonderful day, morning, night, wherever you are, and stay safe out there. We'll see us tomorrow in the next video. Peace.